Ray Dallio is one of the world's most successful investors, so when he speaks, the street and the streets listen. And the billionaire founder of Bridgewater Capital, the world's largest hedge fund, just threw a curveball that has everyone checking their homework. The market so far this year has broadly followed a QE/QT framework, with the assumption that the Fed raising rates and reducing its balance sheet is pressuring the market lower. Well, Dallio thinks that the U.S. economy is facing structural and stubbornly high inflation that will eventually lead to stagflation, and that the great pain this causes will force the Fed to cut rates. Dallio sees this taking place by 2024, heading into the presidential cycle. However, even as recently as this week, we have seen the Fed begin padding out a soft landing, bidding for $10 billion of bonds when they were supposed to be reducing their balance sheet by that amount. So, what does that mean for Bitcoin? Well, Dallio, for one, is a fan. He has a small portion of his portfolio in Bitcoin and considers it to be digital gold, and that makes sense considering his views on stubbornly high inflation. But how do we factor in Bitcoin's recent correlation with stocks? Well, on one hand, if the Fed is preparing for a soft landing and is destined to cut rates in 2024, well, that's bullish for Bitcoin in the long run as more liquidity floods into markets. But it's also worth considering that if inflation becomes even more problematic than it is today, Bitcoin's link between stocks may break, and the digital gold that Dallio sees may come to fruition, also bullish for Bitcoin. In the short term, we're sticking to our guns and saying that we see a relief rally in June, followed by a retest of local lows. But if Mr. Dallio is correct, in the medium term, there could be positive headwinds for Bitcoin.